Meanwhile, 9:04 or 9, almost 9:05, it's time for the big brokerage call of the day. Morgan Stanley is overweight on Oil India, has hiked the target price to 625 rupees. Harsh joins in with details of this call. Harsh, oil upstream is not necessarily in favor. Why is Morgan Stanley constructive here? In fact, I think even CLSA is up the target there, but tell us the Morgan Stanley rationale.
Well, yes, interesting one. 55% upside from here, and therefore could well be a big positive one. The stock has derated in that sense, is what Morgan Stanley believes. Now, over the last 2 quarters, you've seen the stock derate 40%. It's a large correction that the stock has gone through. What could the concerns be? One, you have worries about production growth. Second, no terminal value for 40-year reserves are currently being factored as per Morgan Stanley. And third, rise in average selling price is not exactly getting fully factored. And some of those may well be upside, may well pose potential for upside for an Oil India. One, it's the fastest growing hydrocarbon producers globally. Second, it's also a rapidly growing market for natural gas, especially the Indian market. It's a key gas producer with unit profitability expected to double by 2028. Higher than expected energy prices are expected to aid the company, and energy prices also to be aided largely because of strong demand given the AI push. The demand story also does not entirely depend on completion of gas pipelines as per Morgan Stanley. They've in fact de-risked their estimates to a certain extent, and production is expected to be just 3% in FY26 growth, 3% growth in FY26 and a 19% CAGR thereafter to FY28. They're expecting a 12% FY25 to 28 CAGR with regard to production and a 16% earnings growth to likely unwind over the next 3 odd years. Your expected ROE profile at the end of all of this is expected to be at 18%. The current value rather at 7.8 odd times price to earnings and a 4.5% dividend is also very, very lucrative versus global peers. So they're very positive with regard to this one.
By the way, like I said, even CLSA has upgraded Oil India from underperform to a hold. So bear that in mind. Their target is 450. Okay. Harsh, thanks for putting that into perspective. No big movements here though, unfortunately. Oil upstream isn't quite really shaping up very well. Sunny, are you enthused to buy? I mean, what is your brokerage views or house views on some of the oil upstream companies, particularly Oil India, let's say?
I think, Neeraj, no doubt that in terms of valuation, all these companies are trading at a very cheaper or a reasonable valuation. But my only worry is that, looking at the Trump narrative earlier where yes, time and again stressed that oil prices need to move down and that will bring down the inflation for entire global environment. And that's something worries me, at least for an upstream company. So at a current juncture, in fact, I would like to be more bullish on downstream companies than oil marketing companies. So that's the scenario which I am playing out, that I'm riding on that. Going forward, oil prices will remain subdued, and that will benefit oil marketing companies more rather than upstream companies like Oil India and ONGC.